Hey everyone, Cesar Pineda from Farmers Insurance, Cesar Pineda Agency in Norwalk, Connecticut. Hope you're all having a great week. In today's insurance tip of the week, you guessed it, we're talking about life insurance. Today we're going to be talking about cash value. What is cash value when we're talking about life insurance, specifically permanent life insurance? Well, let me start with that. There are two types of policies, ones that last forever and ones that last a specific amount of time. The ones that last only a specific amount of time, whether it be 10 years, 20 years, 30 years usually, do not build cash value. The ones that last the rest of your life do. Now, again, what is cash value? Well, you could think about it in two ways. The first way you could think about it is you purchase a house, it builds equity over time, right? Versus if you rent a house, well, you paid your rent every month, hopefully on time, and then you moved out and that money is gone, is no more, right? Versus you pay a mortgage every month and you continue to build equity into the house because potentially the house is worth more and you own more of it, right? So life insurance is similar to that, but you could also think about it like a savings account, because if you're putting money into a bank account every month and every month and every month and every month, at some point down the line, 10 years from now, you're going to be like, whoa, I totally forgot I had this account. And you're going to look into it and you're going to be surprised and shocked about how much money you ended up putting aside. Well, life insurance in this scenario can work as both ways. So actual cash value is the amount of money that builds up over time if you do, again, put money into it, put money into it, put money into it. With that money that you put into the life insurance policy, for us, we basically tie that to the markets and to the stock exchange. And if everything is going well, then guess what? You're going to be doing very, very well. But what happens if the markets aren't doing really great? Well, for you as a life insurance owner, there is really no risk because there are minimum guaranteed amounts that it will build over time. So that means that you don't have the burden if, God forbid, the economy goes down the drain, right? So actual cash value, again, is basically money that you could put aside. And when talking specifically about life insurance, it's on top of whatever your death benefit is. So if you today purchase a policy for $500,000 and you pay it every month, every month, every month, every month, 10 years from the line, you could come to me and be like, hey, how much do I have for cash value? Well, Mr. Smith, you happen to have $150,000 in actual cash value. Well, that is your money. So that means that you could take that money out. It is called a loan because basically you're taking the money out and you're basically supposed to put it back. But if you don't put it back, worst case scenario, they just deduct it from whatever amount of money the death benefit was going to be at the end of the day. So with that money, you could purchase investment properties, you could send your kid to school, you could do so many things with it. And the beauty of it is that it's sold tax deferred, meaning that you don't pay taxes on it. And there are ways to turn this into a wealth building option, and there are so many beautiful ways that you could just turn this into a financial tool. So for life insurance or anything else, give us a call at 203-803-2153. I'd love to speak to you, and I will hopefully see you next time. Bye-bye.